Using life insurance to build wealth involves leveraging certain types of policies, such as whole life or universal life insurance, that include a cash value component. Unlike term life insurance, which only provides a death benefit, these policies allow you to build cash value over time, which can be accessed during your lifetime and used for various financial purposes. When you pay premiums for a whole or universal life insurance policy, part of the payment goes toward the cash value, which grows on a tax-deferred basis. Over time, this cash value accumulates and can serve as a financial resource. You can borrow against it or withdraw a portion, often without tax implications, depending on the policy and how it's structured. This cash value can be used to cover expenses, fund investments, or supplement retirement income. Additionally, many policies pay dividends, which can be reinvested to accelerate cash value growth or used to cover premium payments, further building your wealth. The cash value also provides a source of funds that is independent of market fluctuations, which can add stability to your financial plan. However, it's important to evaluate fees, premiums, and the growth rate of the cash value before choosing a policy. Consulting a financial advisor can help ensure that a life insurance strategy aligns with your wealth-building goals and overall financial plan.